It walks downstairs alone or in pairs and makes a clunkety sound. A thing, a magical thing. Everybody knows it's Spy, Spy, Spy. Going downtown today. Spy. Why do you just laugh at your own jokes? Because they're funny and I like to entertain myself. We are red rum today. Red Rob. We've got S&P 500 down 53.5 points, Dow Jones down 465, Nasdaq 150, Russell 36, and even our friend that crude oil. You're so crude. Down almost 4%. So we've got ourselves some action going on here. I have no idea if there's an actual reason why the market is down today. I just tuned in. Got back from the YMCA. Had to swing by Lady Health Nut. We had some vials of blood drawn so she can have her gut microbiome and other things evaluated. We're on a health kick. We're on a little bit of a health kick. Trying to live forever. Is that possible? Maybe one day we can live forever. So we'll be watching that. So my thoughts is on that, on the market going down, on the S&P going down, on the SPY going down, is I may consider, I've got 3 trades on the credit spreads that I don't like on SPY, and they're right here, back to back to back jacks right there, expiring May 9th, May 10th, May 11th. We have the 421/430, the 418, and the 420. And right now, that 418 is making my butt stink, down $119. So if we keep watching that, I should just close them all right now. I'd still be in the green net on all 3. Still be in the green net on all 3. And then take all that risk off the table. We could very much consider doing that. 409.88. She's real fine. My 409.88. It was up at around 415 at open today, and it has slowly, well, it went sideways for a while, and then walks downstairs, a loader repairs, and makes a clickety sound. A thing, a wonderful thing. Everyone knows it's Slinky. If you know that commercial, then yep, you know, you're pretty cool. Or you're just old like me. Just an old goat. I don't mean the good goat, not the greatest of all time, just, you know, an old goat. Let's look at some of the other positions. I put a handful of others on, as they say, off camera, because it was a wild day around here yesterday with Coco and Mads preparing for their adventure of a lifetime. They leave Thursday for Wyoming. They'll be gone all summer, and I will shed many tears. So we got the AbbVie put. It was looking good at the 155, and then it's just been taking gas today. Yeah, because it was climbing back up to that 155, and now it's down 0.5% today. You know, just tracking with the market. These Amazon puts, Amazon must be up just a little bit. Yeah, they're up 1.28%. So this 98/95 Putsville is doing well so far, so good. We collected $120 on that, and we can get out for about 50% profit right now, 55% according to total return. So we'll keep an eye on that. Just put that on yesterday afternoon. These Blackstone puts, I put those on today while I was waiting for her to give her blood drawn. You got an addiction. You got a problem. So while I was waiting for my sweetheart to have her blood drawn, I put this trade on. And since then, Blackstone's just gone down some more. Yeah, because it was probably at 85, around 85.30, 85.40 when I put the trade on, and it's already gone down another dollar bill. It's currently at 84.12. Blackstone is trading, but I was like, you don't own any Blackstone. Would you take it at 82? I would. I'd take it at 82. So I may have to. You may be forced to. Put your hands up and your Blackstone down. And we still have Citigroup 53/56 call credit spread stating that we are good to go because Citigroup's probably down today. Yeah, they're down. Whoa. Downtown to Chinatown, down 3%. So good day to sell some puts, right? Not a great day to be watching your puts still continue to evaporate, though. So this 124 call on EOG downtown today as well, currently down 6.616%. Why is that? Is there any particular reason other than oil keeps trending down? Let's see. Is weakness in EOG Resources Inc. stock a sign that the market could be wrong given its strong financial prospects? Yes, I'm saying yes. EOG, a fine, very fine company. It is. So let's see. What do we know about the E to the O to the G? I was looking at doing some cool screeners this morning before I went to the gym. Got some ideas brewing. Got some ideas for an overall dividend slash option slash wheel portfolio that I want to get more involved in. That's part of what made me create the aggressive Blackstone trade this morning. I might even put another Blackstone put credit spread on now that they're down even further. Maybe put that one out to an expiration of May 12th. Whoa, Johnson & Johnson must be riding high today. Yep, they're creeping out on my 165. You go away. Go away. That's good for my put credit spread, though, isn't it? So we'll keep an eye on that. We may have to roll out the barrel of fun. Because if they're close, these typically can produce just weekly income by rolling them out in the money. You know, if we looked at rolling a position now, it'd be 1 week out, 10 days from now, 10 days to expiration, May 12th. Can we just cover the same position and collect dollar bills? So if we look at the 165, we can. We'd put $67 in our pocket and lock it and still have our position covered at 165 and buy us another week. So I like that idea. I like what's been going on there. Been doing that with the Coke and the cola. So we would do that with Johnson & Johnson as well because we don't want to get rid of it. We want that. The put credit spreads are at 86% profit, so we'll close that probably today. We would look to roll this call again. Coke, I would imagine, is down a little bit. Yeah, they're down over 1%. You can see the value of the cost to close this plummet, which is good for us because it's still in the money at 63.63 on our $63 strike price on the covered call. So if we look at rolling that, if we roll it out another week again, as they say, at the 63, you'd still put $24 in your pocket. So very nice because you're just collecting dividends and collecting weekly premium. It's like a real fun way to roll out the barrel. So if you looked at, what did we say that was? Was it $26? your memory. Hopefully you're not catching my stomach just acting the fool right now. Like, I'm hungry. Feed me. I will not. It is not time yet. So go back to this. Okay, $24. Yes, indeed, 24. So if you just conservatively looked at $24, right? 24 divided by the 63, even though that's not our cost basis, we'll just use the 63. That's not the right math, is it? 24 divided by 6,300. That's the right math. Okay, so there's our equation, and then we divide it by, it's really a net of 7 days. So you divide it by the 7 days, not 10 days, right? Because you're only adding 7 to the current position and then multiplying it by 365. So that's 19.8% annualized plus, the sweetheart 3% that you would capture on the actual dividend yield. That's real money. That's real money. In fact, how much real money is that? 26, and let's just be conservative and say it's 50 weeks. You'd be able to do that. That's 1,300. And on your position of 6,300, and I'm even rounding up just a little bit on the yield, you're at $189. So the idea brewed in my head, and I'm sure that there's way smarter people than me that do these things already, and then they laugh in my face. I've been doing that for years. But what if you had a portfolio that you put together of sweetheart companies you wanted to own that paid a dividend and had a little action? It doesn't have to have a lot of action on options premium. If you're able to work that, like soak it in barbecue sauce and work it like a rib for an entire year, what kind of added lovability can you put on top of your dividend portfolio? I'm saying a very high level of lovability. So we will be experimenting with that as we go forward. All right, what's SPY doing now? Okay, it's tried to fight its way to level for the last 15 minutes. It's currently still down big today, though, almost $6, 1.42%. And we go back to those positions that we, excuse me, that we don't like on the SPY. If we look at the three of them, you'd be, just rough math, you'd be almost $80 in the positive on all three, and then you just wipe them off the board like good riddance. I must have been drinking wine. I actually don't drink wine and trade, just so you know, just like I don't drink and drive. So if we look at further positions on the SPY, I like those because look at this 424, that one's up almost 50%. 426, it's up 70%. So that'll probably come off the board today. Do we have others? Yeah, we've got a 426 there's no reason not to pull that off the board today because we don't know what's going to happen tomorrow. Tomorrow could be, banana, it could be Monkeyville with banana throws everywhere with how the market reacts to what the Fed does with the rates. And again, as we've discussed, the market likes certainty, not uncertainty. So the certainty would be they would raise the rates 25 basis points. Okay. Now, it usually, the first reaction I've noticed is if it does, if the market or if the Fed does what the market thinks it's going to do, it reacts favorably to the green. Then it digests the information like, oh boy, that's still going to put pressure on earnings. That's going to put pressure on borrowing. And that then becomes, what does that do for our market 3, 4, 6 months from now? When will they pivot and begin to lower? So all those things come into play, and then it usually dips back down a bit from its green reaction. The other part would be, well, what if the Fed threw a monkey wrench into everything and said, oh, we're just going to pause? The market, I think the first reaction is going to be, yeah, let's do this. This is how we do it. Then it's like, whoa, wait a minute. What do you know that I don't know? What does the Fed know about this economy that scared them enough to pause their rate raising now, even though the probability of them raising the rate a quarter point was 89%? Then the market would say, whoa, I'm scared now. And when the market is fearful, they take their money and run. They take their ball and run. Speaking of fearful, look what we're doing today. We're down $23,420. That's not a laughing matter, Bart. I know. That's why I want to have a more cushioned and lovable dividend portfolio, because even though I don't really pay much, that's a lie. You pay direct attention to this number. How can you not, as a human being? You want to see that going up, and when it's going down $23,000 in one day, even though you're still collecting sweet premium and dividends and interest, it still makes your butt stink. So we've got some work to do, don't we? This is a very strange market, even though I've only been in it for 4 months. We'll keep battling through it. So that is our check-in right now. Another look at the SPY before we roll out and then think about our planning, our moves, because we got a handful of individual stocks that we're going to be selling puts on today, faux shizzle. And then it looks like we got some closings to do. And did you wait too long to close those positions? Because the SPY is trying to make a comeback. So we will see. We shall see what we do. Thanks for viewing. Subscribe, like, comment. See you in the next video.